Hi traders, Nathan Bray here from ACY Securities. Well, today it's part 3 of our 5-part training modules. So today we're going to look at using the Fib tool, okay, in conjunction with what we've already learned in parts 1 and 2. So we're looking at trend, we've learnt that. We've also looked at major support and resistance levels and how to identify them. The third thing we're going to do is learn how to use a retracement, okay, in your trading. And then to finish off, we're going to put all 3 together. So we're going to utilize both trend, both support and resistance, and your Fib retracement levels to identify a key level in the market with 3 essential things going for them. And then from there, we can look at trading off these levels. Could this fact that we're getting 3 different confirmations to identify a price level in the market potentially result in us we're having a higher probability of trading, okay? That could be the case, and that's what we're going to look at today. So part 3, let's get in and have a look at the chart and explain how the Fib retracement level works. We'll do it on both the buy side and of course on the sell side. Okay, so starting off on the buy side. Okay, so we're looking at a chart on a daily chart. So each candle represents 1 day, and we're looking at the cable, the pound versus the US dollar. So in this particular chart on a daily, I can, based on what we understand about trend, I can see this was a previous bottom, and more recently, it's putting in another bottom, which in effect is higher than this one. So let's mark that in. And I'll also mark in the higher bottom. So you'll see here, price is putting in a higher bottom. All we're waiting for now is for price to put in a higher top. And then what we've got is a change in trend to the upside. So let's just move forward here on these candles. And you can see price is still consolidating, going sideways, and then boom, we have a higher top, higher than this level here. So I'll mark that in too. So we're in a position where we've identified a change in trend. So we've got higher bottoms, higher tops starting to form on this daily chart. So if we're trading with the trend, we could now substantiate a bias. We could say trend-wise, we've got a bias to be a buyer. Now, using the Fibonacci retracement tool, we can try and identify what we call a deep retracement. And what I mean by that is right now, because it's put in this higher top, and we've got a bias now trend-wise to be a buyer, do we just dive in right now and buy? So because we've got a bias to be a buyer, do we just dive in right now and buy? So the idea with the Fib retracement tool is, as we start to see price perhaps moving higher and then retracing a little bit, as a buyer, yes, we want to buy in line with the trend, but we also want to see a deep enough retracement to allow us as a buyer to buy at the cheapest possible price. It's every buyer's dream based on market conditions. So we can use the Fib retracement tool by simply clicking up the top in your tab and clicking on this Draw Fibonacci Retracement, or it's just a bunch of lines with an F. So if I look at the most recent bottom and draw it up, because it's on the most recent move, and we'll just assume that right here, that is the top for now. So what we're looking for is, rather than just diving in and buying, we're gonna wait for identifying the trend being up, but now a pullback to say this 62, or even if you want to risk it, down towards the 79 area. So I'll just highlight those for you. So now we're looking at a target. We're saying if price gets back, I will become a buyer in line with the daily trend, but I want to buy at a cheaper price, okay? And we're going to combine those 2 elements together. So let's just keep moving the chart across, and you'll see price does get down into that region, okay? In fact, it gets a little bit below that 62 level, but it doesn't quite get to the 79. So what we're doing is looking at this as a guide for a retracement zone in line with the trend. Okay, so if we continue to move forward, you'll see if you had bought, up in this area here, then you may only be up on a daily here, you may only be up about 100 pips. Whereas if we buy from this level, then we're getting closer to sort of 30 pips. 300 pips at present. So it does allow us this zone to try and combine both trend with a deep retracement. So now that price is moving higher, what we're looking for now is for price to show signs it's pulling back. So let's say we missed out on this move higher in line with the trend. So now what we'll do is exactly the same thing. We'll draw another one in. We'll say, okay, we're starting to see a pullback. I want to have a bias towards being a buyer. Why? Because the trend is up. It is putting in higher tops and bottoms continually. And because we don't know where the trend's going to end, and the whole concept, as we mentioned, with trend trading is that trends can often go further than you expect. Okay, and that is the reason why people say the trend is your friend. All right, so let's draw it in the fib here. So we'll say this is the most recent bottom down here, and we're going to assume this is the top. But keep in mind that if it continues higher, we'll have to adjust this higher over the coming days. So you'll see here, price moves down. It literally gets down to that 62 retracement of this most recent move. So we're in effect buying the dips, but what we consider to be a deep level. And that is how we'll use the fib retracement in line with trend. The other thing that we've discussed in session 2 is support and resistance. So if price action is showing us that it's putting in higher tops and bottoms, then the third thing that you can combine, and I'm just going to show you an example here, is using resistance acting as support. So we'll notice this level here became resistance with the dots. So I'm just going to mark that in for you. Not perfect, but you get the idea. Okay, so we've got, is a previous roof in an uptrend going to start to act as a floor? Okay, so now we've got a three-punch approach to our price action levels. So we're identifying three things. We're saying the daily trend is up, higher tops and bottoms. We're getting a decent retracement down to this 62 level, which also happens to be a previous daily resistance potentially acting as support. So now we've got three reasons. We're trying to identify levels in the market. So if I continue, you'll see it then continues to put in a higher high. Okay, so this is where I wanted to show you on the buy side how to use the Fibonacci, looking for deep retracements and coinciding with, in line with your bias, with your trend, and also looking for levels in the market where we might have all three line up. Now, keep in mind, it's not going to be the case in every instrument, but it does allow us to click through and look at a whole variety of different instruments and prepare ourselves for these types of potential levels. Okay, so that is what I would say to you. It allows you to identify the levels by going through on your daily chart. In this case, and I'm just going to use this one to give us an idea as to where price is at the moment. So if this is the dollar yen on a daily chart, I'll just make it a bit bigger for you. We can see the trend is continuing up. So if I draw in the fib from the most recent bottom, which is here, again, we'll stick to the buy side. Remember, the buy side is from the bottom to the top. We'll assume this is the top right now. I'm now looking for price, and I can see it now. Daily resistance Could that act as support? Could this roof become a ceiling at this 157.32 level, which also coincides with the 62 retracement zone? So what I'm able to do proactively now is look forward in the market and try and mark in some areas that I could keep an eye on for the coming days or potentially coming weeks, using this method of combining trend, longer term trend with support and resistance whilst using a deep retracement. Okay, so to finish off, let's have a look at using the fib tool. So exactly the same concept, but in reverse, so on the sell side. So let's have a look. For example, we'll go back, say, to this pound dollar, because as we can see, price was definitely moving down. So if we look at from this top to bottom area, the difference is when you're drawing your fib in, and I'm just choosing this to show you how the fib works, we're drawing it in from top to bottom rather than bottom to top. So if we go from this top to this bottom here where the dots are, and you can see what we're looking for as a seller is for price to get up to the 62. Fib retracement level, because keep in mind that if the market is in a direction that is down, then profit taking would require people short, say, to do buying. So that's the retracement we're looking for. We're looking for price to rally back up this entire move down rather than what we were looking just before, which is up. Okay, it didn't quite get there. All right, so let's get rid of that one and let's move it forward. So we had another top here, coinciding with another bottom down here. So let's say we drew that one in. It's a very simple one. So this moved down, and suddenly we're getting price starting to fail at this, between this 62 and 79 area, putting in a lower top and then a lower bottom. Okay, so you can start to see how we're trading with the trend, but combining a deeper retracement. Because if we want to be a seller, we want to try and sell at the highest possible price possible. So we're, rather than just diving in as soon as it puts in a lower low and a lower top, we can wait for a retracement, okay, and look for opportunity. So I'll move forward to the next one. So we'll say this top down to this bottom, and you'll notice it retraces not only to the 62 here, but up very close to the 79 before failing lower and putting in a lower low. So that's how we use the fib tool in conjunction with the trend. And we can also look for levels that the fib tool might fail at. If I go back previously, and even if we look at previous floor acting as a roof. So I'll just draw in a line there to make it easy on these dots. So that's support. And you can see it pretty clearly here. Price does get up and fail at that level. Okay, so that's an example of where we're combining. We're showing that the trend is staying in place and that previous levels of support are starting to be respected as resistance and combining a deep Fibonacci retracement area. And what we're looking at when we do that is by saying that, is this trend in place, and where could I either be a buyer with the cheapest price, or where could I be a seller at potentially the highest price? Okay, so that's where we're combining all three elements, and I would suggest you go through and have a look at different charts and sort of mark in any levels where these three things occur. Now, as we move forward into our next session, we're going to look at these three dynamics and also then look at a trigger. So once that level is reached, are we just going to enter into the market for a buy or a sell? Or are we going to look for confirmation from the market? So it's like we've got our sights, we've lined up our target, we've got three different combination of the market pricing showing us that a certain level is being respected, and then all we need to see is a trigger to move into that particular trade. All right, folks, if there's any questions about using your fib retracement tool or any questions regarding using your fib retracement levels in line with trend and keeping in mind major support or resistance levels, feel free to ask our own senior market strategist, Duncan Cooper, in his webinars live, because he will be highlighting these areas live in those webinars. Of course, if you're wanting to continue your education to a more advanced level, there is a free 30-part trading course available to all our registered clients. All right, have yourself a great day and enjoy this 1, 2, 3 combo.